inherited their wealth is about 60%, 60 in terms of the total number. That is, again, about twice as high as the emerging market average or global average. And I think there are only a couple of countries in the world where the number is even higher. Possibly, I think, Indonesia and South Africa, if I can remember the top of my head.
Okay.
So I think that what we want to see is, and I think that this is why the culture of dynasty pervades across our society. It's not just something
politics.
It's not just politics. It's got to do with business as well. When you have 60% of your billionaires basically have inherited their wealth, and that's twice as high as the average number for other developing countries, that just tells you that this is a societal issue. It's not an issue about just politics or business.
Or a particular family. Okay, I'm going to throw this open to the audience for questions. If you have a question, please raise your hand. We'll get a microphone across to you. I'll come to you, Prateek, in just a second before we get the mics there. So, Richard, let me then ask you, you talked about some of the missed opportunities. In terms of your to-do list, what is the #1 priority that you would put down?
No, as I said, obviously thinking, like as I said, there's a theoretical stuff and there's a realistic stuff.
Realistically.
Okay, let me tell you that theoretically, as I said, the banking system privatization would have been top of my list.
But it's not unlikely to happen.
Right.
I won't say it's not going to happen.
I think that the best hope India has is to keep ushering in an era of competitive federalism, which is that the action has to be more and more decentralized and the states have to do more and more. And as I said, that whether it's the BJP government or that could even be one of the upsides of a coalition government, is that you have to give more and more power to the states, whether it's labor laws, whether it's other things to sort of set up SEZs or manufacturing. The states have to get more and more power. And in that regard, I don't like it when the center imposes cesses which only go to the center, don't go to the states. So I think that if you ask me most realistically what can be done, given the way the Indian polity is moving, is basically much more competitive federalism, where you get much more competition between states to attract investment and to improve things.
We're seeing competitive federalism. We're also seeing much more cooperation now on account of the advent of the GST. I mean, you've got the GST Council, which is virtually deciding indirect taxes now for everybody.
Yeah, I think that's a great...
So the states have had to give up that autonomy altogether. So
not give up the autonomy, but to participate in it.
Sure, but that's a good thing.
Yes, I think that's a good thing. But I think that, as I said, that much more power to be given to the states in terms of what to do with their stuff. So that is, I think, that the more competitive federalism you have, and the center just sticks to the basics, I think that is the best hope for India, if you ask me, given the way the polity is moving over the next few years. So that's the realistic hope. The theoretical stuff, is there any constituency in this at all here which is going to say that let's privatize these banks? No. So we'll keep seeing privatization by malign neglect.
But Air India is like, well, they still might retain about 26% or 24%. We don't know. That decision hasn't been taken. But, are you surprised with that one?
No, I mean to say that, you can get one marquee privatization. I'm talking about the culture. As I said, the banking system is at the heart of it. That is where no economy is able to grow rapidly without a vibrant banking system. And as I said, the share that India has there of the government is about the highest in the world. Maybe after North Korea or something. I don't know. But so I think that's the problem. Yeah.
Okay. Prateek, if you can stand up, we'll get a microphone across to you. Prateek Jain, Indirect Tax Head of PwC. Go ahead.
Yeah. So, Richard, you spoke about de-globalization, and my question relates to that. If you see in last 2-3 months, what US has done is increasing tariff on aluminum and steel, etc. They've taken India to WTO now against SEZ and other concessions that India offers. India has increased custom duty significantly in February. We all know China has been doing it for some time. So do you think this local is becoming a new global in many ways, and it's leading to some kind of a trade war between developed and developing countries? As a global investor, does that concern you?
Of course it does.
How real is the threat of a trade war, global trade war today?
I think that, so if you look at history, in the 1920s, you had a booming economy, and you began to see trade skirmishes. The trade war can become reality once you have a global downturn, because then the scapegoating really begins. That's when you have the Smoot-Hawley tariffs of the 1930, which was seen to cause the Great Depression. That's what caused it. But I have to say, India has to be very careful out here, because I just saw this research yesterday which was very telling, that the US has identified 5 countries in the world where the tariff rates that those countries impose on their exports is much higher than the tariff rates that are imposed on those countries' imports into the US.
Yeah.
5 countries in the world. They are China, Thailand, India, Argentina, and Brazil. Of these 5, 3, China, Thailand, and India, run trade surpluses with the US.
Yeah.
So I think that means that India really is a bit of a target out here. But, you know, China is so much bigger, the problem so much bigger with China, that you will see a lot of action between those 2 countries, and hopefully India can sort of slip by the side. But I think that this is the big risk, that the US sees this in very simplistic terms.
Yeah.
What are the tariffs that you're imposing on our sort of imports into your country, and what are the tariffs that we are charging you for your imports into our country? And so India is among those 5 where the tariffs are much higher here. And we have a trade surplus. So I think that this is going to be a sensitive issue. But in terms of an all-out trade war, I think the real risk of that will come if we get a global downturn. Then I think that many countries are going to be, oh boy, you know, we need to sort of protect our domestic people. Hell with all this sort of globalization and WTO and stuff like that. So that's the big risk.
Well, the silver lining is that the US has moved the WTO as opposed to taking unilateral tariff action, which is what it's done on steel and aluminum. Yes, sir, go ahead with your question,
I'm
please.
P.K. Gupta. I just, you are saying that anti-incumbency, you know, the last 70 years after the independence, probably if you look at 30 years, was not the time of anti-incumbency.
Yes.
Somehow, what is your views that the politician, what they promises, if they are not able to deliver in the last 30 or 40 years, obviously in a clear democracy, the public gives the reply to them. So, you know, which you are saying that probably last 30 years, 40 years, each government comes and the next time the new government comes, you know.
Yes.
So obviously the politician, what they are promising is not able to deliver.
Yes. But I think that, you know, let's distinguish, which is that India was not a true multi-party democracy really until the 1970s, maybe until the 1980s. So it's like in South Africa today, the African National Congress is the only party which is there realistically. So I think that that to look at any of this electoral data before 1970s is irrelevant, because India was still a sort of budding democracy. So it was not a true multi-party system. You know, but I think it's very important. It's very easy for us to say that politicians cannot deliver. I think the next level is, why can they not deliver? At the end of the day, I believe every politician's dream is to die in office. Nobody wants to sort of, you know, be outside office, right? So they want to be in office. Just having seen these politicians when we've been on the campaign trail, I firmly believe that every politician is not out there to like, you know, loot you or is corrupt to the core, etc. They truly want to win elections. Some of them truly want to do things as well. But I just feel that it is like very difficult in this country, given the state machinery, to try and deliver on that promise. It is very, very difficult. Like I remember that this was 2004, you know, we had gone to Amethi, to the Gandhi family's constituency. I still remember asking them there, the Gandhi family was there, asking them there that, why is the constituency looks like this? It doesn't look like a VIP constituency when you go out there. And the answer they gave me, I thought was interesting, whether you believe it or not. Their answer basically was that you'll be surprised how much the state government tries to undermine any development that we try and do in this constituency. Whether you believe it or not, I don't know. But at least it was, to me, fascinating that here, at that point in time, is the most powerful family. Their constituency looks basically like a pretty backward constituency. And yet, their explanation for that is how difficult it is for them to try and fix the problems in the constituency when the state government is trying their best to make sure that no funds reach this place. So I think that it's the state which is so broken out here, which is what I think is the core of the problem. So the politicians, many of them do try, but it is not there. I think, and some of them are so scared. Like a consistent observation we often get when we travel to this constituency is, after winning the election, the MP or the MLA is nowhere to be seen. He doesn't come back. Part of it is because I think he realizes how daunting the task is, because everyone expects them to offer individual solutions.
Yeah.
That come and offer, like you basically come and fix this, come and fix this. You go to any politician's home, there are 1,000, 2,000 people waiting outside their homes looking for some form of help. It's just impossible for that to deliver because the state machine doesn't work.
Vikas Khemani of Edelweiss. Vikas, go ahead.
Ruchi, thanks for such a great session. We are in an environment where global rates are going up. Global growth is no doubt strong, but I think interest rates are going to go up. Debt market is practically now, the bull run is over. So how do you see, when most of the emerging markets are leveraged, do you see a lot of headwinds for the global markets, especially developed markets, and what it would mean in terms of its implication on the emerging market? China crisis is almost waiting to happen. Paul was speaking about that. That could happen any time. So what's your view overall in the equity market per se, globally for developed market and its implication on the emerging markets?
No, as I said, that over the next 12 to 18 months, I'm very concerned about global equity markets because this end of easy money environment is bound to have negative implications for global equity markets. The good thing about emerging markets is this, that many of these countries have underperformed so much compared to the US because they were going through their adjustment process between 2011 and 2016, that they are very much at the early stages of the economic cycle. The US is at the late stages of the economic cycle. If the US expansion continues till next year, this will be the longest US expansion in history. Emerging markets are just, many of them outside of China, have just begun the recovery process. Even the Indian market, if you look at it in dollar terms today, is barely above its high of 2007. The US stock market is up 70, 80% since then. So, and most emerging markets, on average, are down about 10 to 20% compared to their 2007 highs. So I feel over the next 5 to 7 years, just because the cycles have played out differently, that emerging markets are in a better position compared to the US, not because of anything else, because the US is at a much more mature stage of the cycle, and China and others have some problems. And many of the emerging markets today are in a better position. We keep referring to this term called Fragile Five. That term doesn't exist anymore today. Why? Because all these countries today, whether it's Brazil, Russia, South Africa, India, their current account deficits have all shrunk. They're not running the kind of very high current account deficits that they once did. So their reliance on external capital today is much less. So in short, I feel better about emerging markets compared to the US, given where we are at the stage of the economic cycle. Next 12 to 18 months, though, globally, I do feel that I'm concerned about markets because this end of this easy money era is bound to have implications for financial assets.
Lata.
Richard, the only time we had a paradigm shift in policies was not when we had a stable government, but when we had a minority government and an external economic crisis, 1990.